Hello friends of rational investing and welcome to this new video. In today's episode we want to take a closer look at the Apple share. As always, we look at qualitative and also quantitative aspects. At the end of the video we also calculate the fair value. So be sure to stay tuned until the end. Before the video starts, there is the disclaimer as in every video. Apple is active in the technology sector and sells hardware and software. The company is the second most valuable company in the world. Apple is also the third largest smartphone manufacturer in the world. The company employs 147,000 people. Compared to the last analysis, about half a year ago, the number of employees has increased by 10,000. The market capitalization has also increased. Currently it is $2.3 billion. About half a year ago it was $1.67 billion. The headquarters is Cupertino in California in the USA. The CEO is Tim Cook. He has been in office since 2011 and has been working for the company since 1998. Let's first take a look at the company's shareholder structure. Many well-known asset management companies are represented in the top 10. For example, Vanguard and BlackRock, but also Berkshire Hathaway. Berkshire Hathaway is the second largest single shareholder. Apple stock is by a short distance the largest position in the Berkshire Hathaway portfolio. Currently, the share is about 47.5%. Let's now take a look at Apple's founding and success story. The company was founded in 1976 in Steve Jobs' garage. Besides Steve Jobs and Steve Wozniak, the founders also included Ronald Wayne. In 1980, Apple went public. Its first owned product was the Macintosh in 1984. Steve Jobs, who had to leave the company in the meantime, returned in 1997. 1 year later, the so-called iMac achieved a breakthrough. In 2001, the iPod was introduced for the first time. The company didn't really take off until 2000, however, when the iPhone was launched. In the same year, the company was renamed from Apple Computers Incorporated to Apple Incorporated. Steve Jobs passed away in 2011. His successor is the current CEO Tim Cook. At the moment, Apple shares are on a successful course. We'll take a look at the price trend right now. In the future, the company wants to open up new markets with new innovations and new products and continue to delight customers with high-quality products. Moreover, let's take a look at Apple's share price. In August of last year, the company carried out a 1-to-4 split. During the corona crisis, the share price briefly collapsed, but it was able to recover by a long way and reached a new all-time high. The performance over the last 5 years is 430.1%. The performance over the last 3 years is 238.2% and the performance over the last year is 53%. Let's also take a look at the company's sales and profits. Since 2004, sales have increased sharply. In 2012, the company's sales doubled. Profits have also increased very sharply over the last 20 years. Sales growth over the last 5 years has averaged 3.3% per year. Profit growth over the last 5 years has averaged 1.5% per year. In fiscal year 2020, sales were $274.5 billion and profits were $57.4 billion. Let's also take a look at the company's business model and some of its business areas. The core business is the development, manufacturing and marketing of computer hardware and computer software plus services and support for ecosystem products. The largest business area is smartphones with 74.7%. This business area is represented by the well-known iPhone brand. The computer area accounts for 9.9% and includes various products such as the MacBook, the MacBook Air or the MacBook Pro. Various PC models such as the iMac, the iPad as a tablet computer. In addition to smartphones and computers, the company also sells other hardware. This business area accounts for 17.6%. They include, for example, monitors, memory systems, printers, video cameras, memory cards and servers. But accessories such as the Magic Mouse or AirPods also fit into the company's own ecosystem. Other services with 17.2% include maintenance service, internet access service and some other products. Now let's look at revenue by segment and region. The largest business area is iPhones with $137.8 billion in fiscal year 2020. This is followed by the service area with $53.8 billion. Wearables and home accessories are in third place with $30.6 billion. Then comes the iMac segment with $28.6 billion, and bringing up the rear are iPads with $23.7 billion. The region with the highest revenue in fiscal year 2020 was the USA with $109.2 billion. This is followed by Europe with $68.6 billion, Greater China with $40.3 billion, Japan with $21.4 billion, and the rest of the Asia-Pacific region with $19.6 billion. Now let's take a look at Apple's product portfolio and assortment. The most important products include the iPhone, the iMac, the iPad and the so-called wearables and home accessories such as AirPods, the Apple TV, Apple Watch or the iPod Touch. The range of services includes digital content, streaming services with platforms such as the App Store, Apple Music or Apple TV plus the insurance offer AppleCare, but also the iCloud licensing models or other services such as the credit card Apple Card and Apple News Plus. On this graphic you can see the brand portfolio of the company. Besides the well-known brands iOS, iPad iTunes, iPhone, iPod, iMac, Apple Safari and some other Apple products, there are also several other platforms included. Now let's look at the dividend development. The company has been paying out dividends since 2012. So far, the dividend has been increased every year. Dividend growth over the last 5 years has averaged 9.9% per year. In fiscal year 2020, a dividend of $0.80 was paid out. When talking about dividends, we also have to look at the share buyback ratio and the real payout ratio, i.e. dividends plus share buybacks. In the last 5 years, dividends have always been financed from free cash flow. However, share buybacks exceeded free cash flow for the first time in 2018. In the last 3 years, share buybacks have thus been partly financed from the company's cash balance. Let's also take a closer look at the company's debt. The cash balance shown here is made up of medium and short-term marketable securities. These securities can be converted into cash within a year. For the most part, these are as treasury securities in the amount of $12 billion and corporate bonds in the amount of $20 billion. In addition, Apple has $100 billion in non-current marketable securities, the majority of which, $58 billion, is invested in corporate bonds. With these marketable securities, Apple therefore has net liquidity. In 2016, the cash balance was $67.2 billion, and by 2020, the cash balance has increased sharply to $90.9 billion. Net debt in 2016 was $19.9 billion, and by 2020, it has increased slightly to $21.5 billion. The gearing ratio, i.e. net debt divided by EBIT, was 28.2% in 2016 and has decreased slightly to 27.8% by 2020. Thus, the company has high liquidity or very low gearing, easily meeting our 300% criterion. Let's head over to the profitability and some key operating figures. The gross profit margin has declined slightly over 5 years and was just below our criterion of 40%. The EBIT margin has been relatively stable at 25% over the last 5 years and easily met our criterion of 15%. The return on capital employed also meets our criterion of 15% and has fluctuated around 25% over the last 5 years. The return on equity has risen sharply since 2017 to over 80%. Let's also take a look at Apple's moat. Apple is a strong brand that stands for luxury, trust, but also high-quality products. Due to innovative production processes and sheer size, the company is able to secure cost advantages and high margins. Furthermore, the company benefits from technical know-how, for example innovative software and special construction and manufacturing parts. The company's products are part of an ingenious ecosystem. The software harmonizes wonderfully with the company's own products, but it is difficult to link it with other products, for example products from the competition. The management is strongly vision-driven. The goal for the next few years is to expand the product range and open up new markets. Last but not least, the company has secured its innovation with many patents. Let's now take a look at some future prospects. The so-called Project Titan was launched in 2014. In 2015, there were first rumors about a secret car project. So far, however, these rumors have not been officially confirmed. Tim Cook decided not to comment further on this in a recent interview. In 2019, Startup 3 was acquired. The company uses artificial intelligence to produce self-driving systems for cars. Furthermore, Apple has hired several high-ranking Tesla employees, including a vice president and the chief vehicle engineer. There have also been job postings from Apple related to battery technology, vehicle software or safety and assistance systems. Innovative battery design should radically reduce costs and increase the range of the vehicles. There have also been initial, albeit inconclusive, talks with car manufacturers Hyundai, Kia, VW or BMW. It is quite possible that Apple only wants to provide the software for self-driving cars. The first products could be presented in 2024 at the earliest. Besides the cars, there are also other exciting prospects for the future. In the future, Apple would like to install its own processors in the MacBooks. These are the company's own M1 chips, which are to be presented this year. Apple would like to make use of the 5 grams technology in cooperation with the company Qualcomm. The technology is to be installed in the new iPad. There is also speculation about so-called augmented reality devices. As in the past, Apple is also focusing on continuous optimization of the design, i.e. high-quality, futuristic and stylish products that are to appeal to target groups in the luxury segment in particular. Major upgrades to the MacBook and the iMacs are also possible. As always, we also want to compare Apple with its most important competitors. The most important competitors include Alphabet, Microsoft and Xiaomi. In terms of revenue, Apple is in first place with $274.5 billion. The company is also in first place in terms of profit with $57.4 billion. In terms of the average 5-year profit growth rate of 1.46%, however, the company is behind in fourth place. With an EBIT margin of 24.1%, Apple is in second place behind Microsoft with 37%. With a price-earnings ratio of 34.5, Apple is the second highest valued company. So let's summarize. Apple has a deep moat and makes itself unassailable for the competition with technical innovations and a very good ecosystem. Furthermore, the company is a profitable cash machine with very high profit margins and a good financial situation. The company has a very high cash balance and therefore has a lot of investment capital. In addition, Apple can score with a high product variety and the management focuses on innovations and visions. The disadvantage, however, is that sales are dependent on the iPhone in particular. Furthermore, the company is exposed to high pressure of expectations on the part of customers and also investors. Let's now look at the dividend expectations for the next 10 years. For the first 3 years, we have used analysts' estimates. In 2020, a dividend of 80 cents was paid out with a current share price of $135.94. We have a dividend yield of 0.59%. By 2025, the dividend could rise to $1.25. With a dividend yield of 0.95% in 2030, a dividend of $1.94 could be paid out. With a natural dividend yield of 1.43%, if you were to buy an Apple share at the current price, you would have your money back through the dividend after 73 years. Let's now look at the valuation in the past. The price-earnings ratio over the last 10 years has averaged 18.5. Currently it is 40.3. The average enterprise value divided by EBIT was 14.2 and is currently 35.2. The average price-sales ratio was 4. Currently it is more than twice as high with a value of 8.4. With a current share price of $135.94, we arrive at a free cash flow yield of 3.2%. Let's now look at the calculation of the fair price based on some valuation methods. We use the average price-earnings ratio since 2010, the industry standard price-earnings ratio, the average enterprise value divided by EBIT of the last 10 years and that of the last 5 years, and also the price-sales ratio since 2010. According to all valuation methods, however, Apple is currently overvalued. We arrive at an average fair price of $70.07. The difference to the current price is 48.46%. Last but not least, let's take a look at the calculation of fair value based on discounted cash flows. For the first 5 years, we have again used analysts' estimates. We also assume perpetual growth of 3%. With a discount factor of 10%, we arrive at a fair value of $93.85. With a margin of safety of 22%, the fair purchase price is $73.20. Apple would therefore currently be overvalued according to fair value and according to the purchase price with a margin of safety. The internal rate of return is 7.9% and 6.2% with a margin of safety of 22%. Now you are asked, do you already have the Apple share in your portfolio or would you buy the share at the moment? Feel free to write about it in the comments. You can also share your own assessments of the fair value. As always, we also rely on your feedback. If you liked the video, please give us a thumbs up. We are also always happy to receive suggestions for further analyses in the comments. We recommend subscribing to the channel and activating the bell so that you don't miss any more videos. Thank you and see you next time.